What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Amazon stock, ticker symbol AMZN, on a variety of time frames in anticipation of the next trading day, Monday, February 5th. Well, Amazon here on Friday, finishing the day up nearly 8%, 12.5 points. Of course, we had earnings on Thursday, pretty blowout report. Let's take a look at this here. First of all, I want to start on the 1 minute chart and just give some quick insight to some intraday stuff that I think we saw occur here on Friday. Okay, so this was, of course, a sloppy test of that 2 standard deviation band away from volume weighted average price. For those of you who don't know, if I had to choose one intraday, like quote unquote indicator, it would be the volume weighted average price, and it would be for 2 reasons. First of all, it's measuring something real. It's quite literally measuring the volume weighted average price. But secondly, it's probably the most popular intraday indicator. And that's important to me. I'm a self-fulfilling prophecy guy. I believe TA is a self-fulfilling prophecy. And you see that I'm making these analysis videos every day for so many of these stocks because I believe TA works, but I think it works for reasons other than what most people think. I think it simply works because it's a self-fulfilling prophecy, and you see people, institutions, and algorithms trading around these levels, making decisions based on these levels, at least in the short term. Okay, fundamentals win the long-term game. Technicals win the short-term game. But we saw here a sloppy test of that upside that upside band here on the volume weighted average price 2 standard deviation band, and then you saw a cleanup here. Okay, it would not be surprising to me at all if we saw a couple of scalpers watching this next test. Of course, it never quite got up there. Okay, the channel was tightening down a bit, and it never quite got up there for another test. It's highly likely you would have seen a lot of scalpers, potentially even myself, entering here for a short play just in the very short term here on Amazon. But again, that's very much so different than the macro view of Amazon. I mean, the stock's up 8% on Friday. Beautiful day for the stock. By the way, if you guys do want to get scalp setup alerts, my personal alerts, as well as potentially swing trade setup alerts, unusual options activity, maybe even platinum one-on-one, there's a few spots left for that. Check out that link in the pinned comment. Get grandfathered in. Hope to see you join. Let's take a look now at the 5 minute chart. Let's look at volume on this move, okay? So what's really interesting, and what I'm always kind of looking for, is increased volume in the direction that supports my thesis. Okay, now we got, of course, big volume off the open. That's not unexpected. But the volume, it was highest during that upside move. But in all honesty, guys, there's not a lot to say about volume on Friday on Amazon. And truthfully, a big reason of that is because we didn't really see a whole lot of pullback throughout the day to compare anything to. Okay, so you need both if you want to make a comparison. Let's look at the 30 minute chart and get more context here as we head into Monday. So this 50 period is what I'm really keeping an eye on. It's getting yanked up from this big earnings move. It's happening quickly, which is actually a very good thing. You want to get feet underneath a stock, so to speak, as soon as possible after we see a big move in your direction on earnings. Now, if you were a bear looking at this earnings move, you'd ideally like these two to take their time, not give the stock any reason to hang out up there any longer than you believe it should be. Okay, so upon a retest of that 168.36 currently, it's going to move 50 period moving average here on the 30 minute. Obviously, if you're a bear, you'd prefer to see that downside break, head back down toward the 200 period. But if you're a bull upon a retest, obviously, you want to see that hold nice and strong as a support area here on the 30 minute chart. Remember, always looking at multiple time frames for the most contextual view of a stock here, especially when we're looking at the short term. So with the 4 hour chart here, this one's going to be hard to look at because this big upside move is going to make the 50 period and the 200 period really take their time. The 4 hours is a longer time frame, okay? The moving averages take longer to get yanked up. So, I mean, realistically, there's really not a whole heck of a lot to look at here on the 4 hour, aside from potentially a couple of levels. This recent high here at 174.50 is something that I'm looking at. If you're a bull, you obviously want to see that break upside, ideally get above 175. And if you're a bear, you wouldn't want to see this recent high get broken to the upside. But listen, that nearest kind of potential safety net, at least technically speaking, here on the 4 hour chart, Currently is way down toward 160. So if you're a bull, you're looking to get some movement up here to try to help yank that 50 period up there as quickly as possible to kind of act as a potential safety net. It's always good to have that rather than not, right? Well, let's zoom out now and take a look at kind of the most important chart of all, which is going to be the daily. Now, it's going to be even worse here on the daily. This is one of the big problems you get when you have massive moves. It's great to see a big upside move in your favor if you're a bull. But the problem is, again, these safety nets, you can see that 50 period is just, that 50 day more so now, is just barely starting to curl upside. Okay, it's going to take its time. So ideally, if you're a bull, listen, priority number one, especially on the daily chart, just start forming some new support levels that can hold this thing up or potentially even help push it higher in the near term here, while these things take their time coming up and forming that safety net, because we know on these big blue chips, they eventually like to come back in for a test of especially the 50-day every once in a while, even the 200-day, even during a bull run, right? Especially during a bear market, right? But obviously, if you're a bull, you want that back test to be as high as possible. So priority number one, form some short-term or mid-term support levels up in this new region. Give this thing time to work its way back upside. Now also here on the daily, again, it's not unexpected that volume's up, but when it's in your favor, you can't complain when volume's up. You know why? Because that's a big sample size, right? The reason I always say that, you want a big sample size of the market agreeing with your bias. You don't want a big sample size going against your bias. If the stock itself is moving against your bias, you obviously want to see that sample size of market participants making that move happen to be as small as possible. Now, implied volatility, really good to gauge comfort level of the stock. The stock's ripping, implied volatility is tanking from 40% down to 26.6%. Listen, that shows that the option traders are slightly less insecure with where the stock currently sits. Of course, it's not uncommon to see IV tank off after a news catalyst event like earnings, a volatility event like earnings, right? But if you're a bull and the stock's ripping higher and IV's tanking, that's kind of your best case scenario. If the stock is, for example, let's say you're a bull and the stock's tanking off and implied volatility is ripping to the upside, which is not uncommon when we see a bear market, that's kind of a worst case scenario, just for context here, if you are looking at this from a bullish perspective. Now, let's take a look what the options traders have to say here, okay? Good sample size, 1.848 million total contracts traded here on Friday. 1.27, well, really 1.28 million calls, 568,000 puts. Okay, we're seeing double the amount of calls compared to puts. Short-term speculation, actually interesting here, 0 to 20 delta, right? 278,000 calls, 342,000 puts. So interestingly, the longer-term money, like the reason that the overall call per ratio is leaning so heavily to the call side, we're getting a lot of like longer term in the money contract buyers. A lot of those are likely to be LEAPS contracts, long-term equity anticipation securities, betting on more of a mid and long-term upside move. But in the very short term, actually, the bears aren't buying this. The bears are actually outweighing the bulls for those short-dated, kind of gambly style speculative contracts. We're getting more puts than we are calls. So it's always interesting to see what the option traders have to say. But again, overall ratio leaning heavy to the bullish side. Listen, before you guys head out, leave a comment. That feedback helps out tremendously. What stocks would you like to see me cover here in the near future? Even if it is just more Amazon, I'd like to hear about it. Appreciate you guys, and I'll see you in the next one.